For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by Nate Krienbrink, financial planner at NelsonCorp Wealth Management. Welcome back, Nate.
Thanks again for having me.
So the investment marketplace keeps evolving and changing over time. What is a big change you've seen in recent years?
Well, like so many other things, the financial world is constantly changing. I mean, there's new products, there's new investment strategies that are coming out all the time. Now, one such trend is the usage of ETFs, or exchange traded funds. So over the past decade, the usage of ETFs has continued to grow. And there's actually now more ETFs than stocks, which is what I'm showing here today in this chart that I brought along with us. So for folks who may not know, an ETF, or exchange traded fund, is like a basket of investments that trades on the stock market just like a stock. So if you think about it like this, stocks are the individual ingredients, ETFs are the recipes that you can mix and match different stocks, bonds, or even commodities into one product. So what we're looking at here on this chart is comparing the total number of US companies to ETFs going back to 2010. The blue line that you see there is the total number of stocks, where the red line is the total number of US ETFs. So as you can see, for a long time, the number of companies listed on the stock market was much higher than the number of ETFs. Now that trend has obviously reversed course over the past few years, which is illustrated there up in the upper right-hand corner. So really, this tells us just how much demand there is from an investor for easier, more packaged ways to put their money to work.
Okay, so what does this mean for investors? Is this a good thing then?
Well, I think overall it's a good thing for investors as they have more choices than ever before. I mean, you can get an ETF for nearly anything. The flip side is, though, because there's so many choices, you have to use them wisely.